I call it the China effect, demand from China helping to lift other nations out of the global recession. So what happens if China experiences inflationary pressures? Scott Licamele, director of Red Star Asset Management, is focused on that very issue. Scott, good to have you with us. Thanks so much for coming in.
Thank you.
You're just really back from Asia, right? You've actually done kind of a tour on the ground, checking out what's going on in China, for example. And what kind of impression do you come back with?
Well, I mean, I think we see a tremendous country with very frenetic growth, and probably the key takeaway from the visit there was that despite the very high growth rate, I think there's potential substantial risk that inflationary pressures will heat up, and I think we already are seeing policy tightening through interest rate. And also through the increase in the reserve requirements for the Chinese banking system. So we're already seeing sort of a little bit of an earlier than expected policy tightening agenda or implementation of policy tightening. And so we're a little concerned that the Chinese stock market may correct as a result of that.
So are there any specific areas when you looked at in China that you see more of these inflationary pressures? I mean, is it real estate? Is that the area to be careful of?
Yeah, I'd say basically there are a couple of categories that are troubling. If you look at the CPI basket in China, about 33 or 34% of the basket is made up of food. So that's the food price inflation, is a very big concern. And then also property is certainly another one. I met with a company that develops commercial real estate in Beijing, and I just kind of going over the numbers with them. And essentially, if you look in Beijing, the land price appreciation in 2009 was approximately 100%. So I asked him if he thought it would double again, and he was a little reluctant to clarify. But just to give you an idea of the.
So, but we're talking about land prices that are skyrocketing.
Yeah, I mean, essentially, I think what happened was a lot of the stimulus money that made its way through the banking system and into the economy went into pumping up asset values. So you have a sort of a double effect on both property prices and also in certain, not in all regions, but in certain regions, property prices have gone up quite rapidly, and also the stock market also.
What about Chinese companies that are involved in things like steelmaking, infrastructure? I mean, are those considered to be inflationary right now, or do you still like those? Are there opportunities there?
I mean, we like them, but I think that what you'll see is a deceleration of the stimulus spending. And in fact, the Chinese government has even indicated that they may delay or halt some of the projects that had been authorized in the previous year because the growth has recovered so rapidly there. So I think that the demand, or should I say that the effects of the stimulus, you should see a deceleration in demand across the board somewhat as we move into Q2, Q3 in China, and that could obviously have an effect, in the overall perception of where what is the growth rate going to be there? I mean, we're still expecting somewhere between 8 to 10%, 8 to 9.5%.
That's still pretty good.
Very robust. I mean, it's the fastest growing economy in Asia. Vietnam is the second fastest, but obviously on a size basis, China is the leader. So
would you allocate additional capital to China at this time, or would you be waiting to see what happens? Let's say by the end of the first quarter.
Yeah, I'd be a little wary in terms of the valuations right now. I think there's downside risk. If you look across emerging markets, I think it's similar in India and Brazil. There's also potential for downside there. But I'd say in the case of China, we're looking more at in the commodity space, and we're looking at the upstream acquisition targets of Chinese companies abroad. So the target companies, there have been a number of acquisitions, and there continue to be, and because of the Chinese demand for things like iron ore, coal, et cetera, oil, but more specifically oil and iron ore are very, very strong.
So the idea being try to figure out what the Chinese companies are going to be buying and get in on the same side.
Absolutely, because essentially these acquisitions are still value accretive because the valuations of the Chinese companies themselves are so high that they're coming in and buying these upstream assets, and so it's beneficial on both sides. But I mean, generally we see the greater value in terms of the acquisition target versus buying the actual Chinese.
All right, so a little bit cautious on China, a little bit cautious on India as well as Brazil. What about Russia? I know you're an expert there. Russia, Eastern Europe. I mean, that is definitely leveraged to oil and natural gas, right?
Absolutely, but I would say that because EMEA or the Eastern Europe, Middle East, Africa region as a whole has lagged Asia or at least over the past like 10 or 11 months, has lagged performance in Asia. I would say that I'd be less concerned if you look at price to book, price to earnings ratio, 2010, at least consensus. Russia, for example, continues to be, one of the cheapest main or larger, markets within the emerging market space. So we're not so much concerned about valuations there. I'd say in certain sectors, and clearly, if there's a sell-off, in emerging markets that originates in Asia or a correction, then obviously the higher beta markets like Turkey, Russia are going to get hit, whether or not they're commodities dependent.
But no tightening, at least officially, let's say from the Russian authorities, unlike what you're seeing in China.
Exactly. I'd say that the policy tightening is definitely taking place. We've seen starting last week in China. I think we're going to see it at the end of this month in India, and certainly soon in Brazil. Russia has probably the least of the BRIC countries. It has the lowest inflationary or least inflationary pressure at this time. So we're not as concerned in Russia regarding inflation.
So all right. So no new allocations, at least right now, to China. Maybe yes to Russia right now.
Yeah, absolutely. We continue to hold. We like upstream assets in Russia. Oil, gas.
Gazprom, for example, is one we often talk about. Yeah, or are there any others? What kind of companies are you looking for?
We're probably more focused on oil, within the oil and gas space, on oil upstream assets as sort of a highly leveraged play on Asian demand, in the medium and long term. We're a little wary on gas because I think because of the development of the alternative gas sector, that's a concern for us regarding demand for gas going forward. Or the price levels. So.
All right, I want to thank you very much, Scott Licamele, coming in from Red Star Asset Management. Appreciate your insight, coming back from your recent trip to Asia, as well as giving us some insight into what's going on in Russia. Thank you very much.